It's a tale of two realities. While pension contributions remain robust in 2025, the shadow of gender inequality continues to loom large over retirement savings. According to fresh insights from PensionBee, www.pensionbee.com/UK, one of the UK's leading online pension providers, savers have kept up their strong commitment to securing their financial futures. But here's where it gets controversial. Despite these encouraging trends, the persistent disparity between men and women in pension savings is impossible to ignore, raising pressing questions about how society can bridge this gap once and for all. Let's break it down. In the first half of 2025, average quarterly contributions stood at £1,624, just slightly lower than the £1,677 recorded during the same period in 2024, a modest 3% decline. This dip might indicate that the market be stabilizing after the surge in contributions driven by the increased annual allowance introduced in 2024. Even so, savers are proving resilient, sticking to their pension plans despite ongoing economic uncertainties. But dig a little deeper, and a more troubling picture emerges. The gender gap in pension contributions remains as stubborn as ever. Data from PensionBee, based on 286,000 invested customers as of June 30th, 2025, reveals a stark divide. Men contributed an average of £1,845 per quarter, while women lagged behind at $1,347, a whopping 27% difference. These figures align with recent statistics from the Department for Work and Pensions, DWP, which highlight a shocking 48% gender pensions gap among those nearing retirement age. Put simply, women are still falling significantly behind when it comes to building wealth for their later years. Interestingly, male contributions saw a 4% year-on-year drop, falling from £1,920 to £1,845, whereas female contributions remained relatively stable, dipping only slightly from £1,349 to £1,347. This suggests that women are holding steady in their pension commitments, even as financial pressures mount. On the other hand, men appear to adjust their contributions more readily in response to changing financial circumstances or market fluctuations. While this stability among women is commendable, it doesn't erase the fact that they're starting from a much lower baseline due to systemic inequalities. But here's a glimmer of hope. The gap between employed and self-employed savers has narrowed. In the first half of 2025, self-employed individuals contributed an average of £1,635 per quarter, compared to £1,679 for those in traditional employment. That's a difference of just £44, marking a significant improvement. Contribution levels did decline slightly from their 2024 highs, falling 4% from £1,708 for the self-employed and 1% from £1,702 for employed savers, but the narrowing gap is a positive sign. Lisa Picardo, Chief Business Officer UK at PensionBee, weighed in on the findings, emphasizing the urgency of addressing these inequalities. We can't allow today's contribution gaps to become tomorrow's poverty in retirement, she said. While it's encouraging to see average contributions maintaining 2024's exceptional levels, the persistent gender gap in contributions is deeply concerning. Picardo went on to explain why this issue matters so much. The fact that male savers consistently contribute over 25% more than female savers isn't just a numbers game. It reflects deep-rooted systemic inequalities that accumulate over decades. Women often earn less than men and take career breaks to care for family members, both of which directly impact their ability to save for retirement. When you combine these factors, it's no surprise that women face greater financial insecurity as they age. She added, the DWP's own figures show a staggering 48% private wealth gap between men and women approaching retirement. This isn't something we can afford to ignore. The government must take bold steps to address these structural barriers through policy reforms. While employers and the pensions industry need to step up and do more to support women's retirement outcomes. So, what does this mean for the future? Can we truly close the gender pensions gap? Or will it continue to haunt generations of women? And this is the part most people miss. Solving this issue isn't just about fairness. It's about ensuring financial stability for everyone in their later years. What role should businesses, policymakers, and individuals play in leveling the playing field? Do you think enough is being done? Or is there more work to be done? Share your thoughts in the comments below. We'd love to hear your perspective.